Hi, I'm Andrea Lilienfeld,
And I'm Christine McConnell with Nations Lending.
and we're back at the K Grant Group's office here in South Scottsdale today. And I'm so excited to just hear a little bit more about what should we talk about today? What if we talked about the equity in different people's homes?
Yeah, I thought that's a great topic. We'll talk about all the equity that people have today in their homes. And there are people right now that want to buy second homes, investment properties. Maybe they want to move. Maybe they just want to buy another home, period, right? But they don't want to sell their home because they have such a low interest rate. What about renting that property out?
We hear that all the time. The number of people that I talk to that say, I want to upgrade to a new home, I want to do this, but I can't get rid of my sub-3 interest rate. That would just be dumb. I mean, I hear it all the time.
Right, so what a great time to make that a rental property at 3%, the cash flow you would have. But before you do that, go get a home equity loan. You can get a line of credit. Usually banks will.
So how does this work? So let's take a step back. You say take a line of credit out of it. Is it taking a second mortgage? Is it a true line of credit? How much can you take?
Yeah, so
how does it work?
So it is a true line of credit. It's a HELOC, home equity loan of credit.
Okay.
Home equity line of credit.
Yeah.
And let's say, just hypothetically, your home's worth $800,000.
That's a good position to be in.
And you owe $400,000 on that mortgage.
Okay.
Take a line of $200,000. If you don't use the entire line, you're not paying interest. You're only paying interest on the money that you're borrowing. So if you only use $100,000, you only pay interest on $100,000. You still have $100,000 on that line of credit. But take that $100,000 and use it as a down payment on either another primary home because you want to either move up or move down, and you want to rent out your current home, buy a second home. A lot of people are dreaming of having these second homes up north, or even an investment property.
So you can use that line of credit just like cash for a down payment. So I'm still gonna be able to qualify for a primary, secondary, or investment property loan.
Just like cash. Yeah. So lenders will consider that HELOC payment in the overall DTI, the debt to income.
Okay.
But yes, it's treated just like cash.
And so if that's something that we have a client interested in, is it best that they go to whoever's currently servicing their mortgage? Do they come to you? Do they come to who they bank with? What's the best steps to find out how much can they actually take out?
Sure. So most banks allow you to take up to 80% of the value, right? So if whatever you owe, and then the additional line of credit up to 80% of whatever that home appraises for.
Okay. So they just want to make sure they still have 20% of equity that they have. So they'll take what your current mortgage is plus what you take out, and those combined equal to 80%.
That's correct.
Okay.
And you just go to your local bank or credit union because you're gonna get the best rates there.
Okay.
And they typically charge no fees. So it's a win-win, and people don't realize that. They think that they have to, save up the money, or they have to get a gift, or they have to pull from the 401k. Use the equity in your home to do that.
That's crazy. So I know I'm not gonna put you on the spot about telling the interest rates. They change every single day. And I'm going to my local credit union or a bank to take this, but typically are you looking at a couple points higher than what an actual mortgage would be? Are you looking at, what am I looking at paying for interest on this HELOC?
You're looking probably, today I would say anywhere from maybe 8.5% to 9.5%.
Okay.
So it's not, it's a little high, but you only need to make that interest only payment.
Okay.
Now, it's best if you can add towards principal, but just think
how long can I carry that? So I take out a line of credit on our primary home because I find a great opportunity for an investment property. I know it's getting cash flow, but I need the money to put down. You say interest only, but is it interest only? Is the minimum I can pay forever? Is it typically due in 5 years?
Yeah, so most banks want it due and payable in 10 years.
That gives you a lot of time.
Gives you a lot of time. But if you are able to rent out your current home, you have a rate at 3%, and you want to then move up to another home,
Yeah.
right? And you're paying, let's say you take out 100,000 and you're paying 9%. It's really not that bad if you needed a down payment. It's better doing that than pulling from your 401k.
Yes. This is amazing. So if anyone that's listening knows that you're sitting on a ton of equity in your home and you have a low interest rate, you don't want to do a complete refi, you're like, what are my options here so I can buy a second home, an investment property, buy another home as a whole for whatever reason,
Right.
Please reach out to us. We'd love to visit with you about what the different options are that you have available to you to make your dream a reality.